This is the Rational Reminder Podcast, a weekly reality check on sensible investing and financial decision-making from two Canadians. We are hosted by me, Benjamin Felix, and Dan Bortolotti, portfolio managers at PWL Capital. All right, so welcome to episode 325. This is a bit of a different episode, as people can tell. If you're watching, it's just me and Dan today, which Dan and I were just joking that Dan went from being a guest to a potentially infrequent contributor to a co-host in the matter of a couple of weeks.
It's all happening a little quickly here, so we'll see if we can hold it together.
Yeah, moving too fast. Mark is sick today. Cameron is still in Australia. The other thing that happened, though, is that we had a guest planned for this episode, and so we didn't have, a main topic prepared, because the main topic would have been the guest discussion. I'm speaking at a conference, though, this week, and they actually asked to move my speaking time to a time that conflicted with our whole recording setup. So we had to move to a different day. And rather than scramble to prepare a topic, we decided that we would do kind of a follow-up discussion on our episode from a couple of weeks ago on renting versus buying a home. Dan and I were also talking beforehand that both of us like to be very prepared for stuff like this, and this is a little bit more on the fly than usual. But we're going to see if we can make it work.
Yeah, it's just a matter of trying to sort through the incredible response that you got, not only to the podcast but to the follow-up article you did in the Globe and Mail. There was certainly a lot of people who had a lot to say, so we'll work through some of those comments and see if we can follow up.
Yeah. I do also want to mention, actually, we were joking just now about your presence here, Dan, but Dan is going to be a more permanent fixture on the podcast. So we've gotten a ton of great feedback in the couple episodes that we've done with Dan. So people will likely be happy to hear that it'll be more of a regular thing.
Great. Well, I'm looking forward to it.
Yeah, likewise. Okay, so I'm just going to read comments. Some of these are from the Globe and Mail article, like you mentioned, Dan. Some of them are from the Rational Reminder community. Some of them, I think, are from Twitter. But it's all pretty interesting. So one person says, the primary reason for not renting, in my opinion, is security of tenure. There are so many situations where a tenant can be thrown out no matter how reliable they've been. So unless you're renting a purpose-built rental building, if you want peace of mind, buy a house and live in it. Forget about speculating what goes up today comes down tomorrow. I thought that was a really sensible comment. The idea of hedging the cost of living in a specific home is probably the best argument for owning, because you can't get rent evicted, like they said. You're not going to have their families, the landlord's family members moving in. So those are great arguments. The other side of it, though, I think, is that if you do need to move, the transaction costs of owning are much higher than renting. And you can also be taking on a lot of price risk.
For sure. And, I was telling you, Ben, that I actually have some firsthand experience kind of with both of these things. I mean, our family, we're homeowners for at least, I guess, 20 years or so. And then back in 2016, we decided to make a move down to downtown Toronto from outside the city. And we just decided we would sell the home and rent. And that's exactly what we did. And we had kind of both of these issues going on. The first one was, the first place we rented, we thought it looked great, and we lived in it for a little while, and it was fine. But then we eventually realized there were just some problems, and I'm not talking about things that could be solved with renovations, just about the location of the unit in the building and whatnot. And we just decided we don't want to be here long term, and so we just found a better place and moved. Now that was extremely easy as renters. If we had bought that place, we would have been like, hey, we bought this place. We probably want to be here for 5 to 7 years, or you're really taking a hit going in and out on the transaction costs. So I think was a reminder that renting is extremely flexible. And if you're at a place and decide it's no longer appropriate, it can be quite easy to move. And then when we did find a second place, we were there for a couple of years, and it was right before COVID, like literally the week before shutdowns. We got a call from the landlord who said, we've decided to sell the unit. We're not going to renew your lease. You got to find another place to live. Now, again, imagine getting that news in the middle of COVID. So we, long story short, we ended up actually buying the same place from the landlord, they were great about it. I'm very grateful today for the fact that they were so reasonable, and they didn't list the property. We just did a private sale.
Mm.
But we had the ability to do that. If we didn't, we would have found ourselves having to look for a new place in the middle of COVID. So this idea of, a landlord kind of looming over you and with the imminent threat that you're going to be kicked out of the place is real, unfortunately. And with the increase in rent evictions, as they call them, in these places where the landlord is kind of making up excuses to get you out because they want to just fix up the place and then rent it out for significantly more than you were paying, makes it even more acute. So this is a very, I think, sober comment here, and that it does show, regardless of the financial aspect, the security of owning your own home and controlling your own destiny is really important as a homeowner, really valuable.
Yep. Totally agree with all that. And I definitely feel that living in an owned home now, one of the things my son, my oldest kid, son, who's 9 now, turning 10 in later this year, he talked about how much he disliked moving because he lived in three different rentals as he was growing up before we bought our current house. I never had a big problem with moving. It's for sure a hassle. But I did find it interesting that when we moved into this house, he kind of said, does this mean we don't have to keep moving? Like, oh, that's worth something too.
Yeah, it's probably more disruptive to a kid, especially if they have to change schools. But yeah, I agree with you. So,
yep. So there was one comment in the community. I actually asked this user for permission to share his comments on a different episode, and he was kind of like, I don't know, man. Like, I wrote this publicly in the community. You can do whatever you want with it. You don't need to ask. So I stopped asking people. I'm going to read a few comments. Hopefully they don't mind from other people, including this user. So this is someone who always has very, very thoughtful posts in the Rash Reminder community. So he says, for what it's worth, if I think back to my reasons for buying versus renting over 2 decades ago, this is in the US, not in Canada, they were the area. He wanted to live in an area with good schools with reasonable work commutes. And it's true. It's not always easy to find rentals I mean, that's why I bought where I am now. There were no rental options. Duration, an expectation of living there for at least the duration of schooling for kids. Stability, kind of like what we were just talking about. Limited availability of comparable rental houses in the area with a higher risk of having to move houses. Kind of aligns with the conversation we just had. The idea of a home versus a temporary shelter, again, which I think speaks to my 9-year-old's comments when we bought a house. And then peace of mind, which again, I think resonates with what we just talked about.
Yeah, it is interesting too that this idea of there not being a lot of good rental opportunities in neighborhoods where there are good schools. And it's something that comes back to, I think a piece of this that doesn't always get the emphasis that it deserves is that if you want to rent an apartment or a condo, there's lots of availability.
Right.
If you want to rent a house, there's a lot fewer opportunities, right? I mean, I know just with clients, I have actually several clients who, rent houses and have families with kids. But I think they all feel like I got a pretty good deal going here.
Right.
If for whatever reason we have to leave this house, like the amount of inventory out there that's comparable is not very great. So, yeah, it really comes down to, in many ways, not just the sort of rent versus buy question, but the quality and the size of the dwelling that you're actually living in.
Yeah, that's definitely true. Yeah, we lived in 2 apartments, and we did in Ottawa find one really nice family home that we rented for 2 years before we bought our house, but that was rare to find a house like that for rent.
I suspect that a lot of people who rent out houses are only doing it temporarily, and they eventually plan to either occupy those homes or, pass them on to family members or something like that. I think if you're someone who's an investor looking to purchase a rental property, you're more likely to purchase a condo. Just, I don't know. It's just easier to maintain, I think, for one thing. But yeah, there's just not a whole lot of stock out there of really good quality houses for rent.
Yeah, that was exactly the case with that house. It was someone who had gotten an overseas work assignment for 5 years. And so they wanted to keep their home because it was their family home, but they needed to do something with it for the 5 years that they were away. So that was exactly the situation, which actually allowed us, because they were eager to find somebody to occupy it for quite a while. They did a 3-year lease with us,
Okay.
which at the time we thought was super smart because it gave us security of tenure for 3 years. But then we decided to move after 2 years.
Okay. And were you able
So
to
we
break the lease without any problem, or just sublet the
not
last
break it.
year?
No, we
Yeah.
found a sublease,
Yeah. Yeah.
which they let us do, which was nice. But yeah, we saw the other side of security of tenure, which is risk. Like it's kind of the same thing with buying. You take on a lot of risk in exchange for that longer term security.
Yeah.
Nathan M in the Rash Reminder community had a pretty funny, but I think accurate comment. He says that here's the takeaway I got from the episode. Renting isn't throwing money away. Throwing money away is throwing money away. Buying a home may help people throw less money away.
Well put.
Right?
Right. I mean, it really emphasizes this whole idea of forced savings that we talked about. People use that term all the time, but I think your modeling and analysis really showed how valuable that forced savings is. It is one of the most important factors in the decision, right? The fact that more people who were not forced to save, most people who are not forced to save will throw money away.
Right.
Not by renting, but by throwing it away on other things.
Yeah. Yeah, I think that's true. So so on the other side of that though, and this is an interesting one. We touched on this briefly during the podcast conversation. I think I told a quick story about someone who told me they were considering renting a 2-bedroom or buying a 4-bedroom house. So SG Man in the Rash Reminder community said, I really enjoy the conversation around rent versus buy, but on the other hand, reality seems totally removed from the often used models. For example, I've never met anyone who rented the same size or quality property that they wanted to buy. People I've met in real life rent for the minimum, like the rent for what fits them at the time. They find the smallest, lowest quality place they find acceptable. On the other hand, I think you kind of alluded to this earlier, Dan. On the other hand, people buy for the ideal. They wait until they find a house they really want before purchasing. The other thing I've seen is people buying ahead, like buying for the future, or buying something. It's like what this guy's saying, nicer than what they would otherwise rent, which just increases the amount of housing that you're consuming.
Yeah, and of course it makes sense, right? Because if you have a small family that you expect to become a bigger family and you don't want to move multiple times, you might buy more house than you need today because it matches what you'll need in a few years. No one's going to do that with a rental, right? So that does make some logical sense. I don't know that, I mean, unless you feel like your family or your needs are going to change, I'm not sure that it's any more than anecdotal evidence that people will rent less than they would buy. I mean, to go back to our example, when we moved down into the city, our kids have moved out. We had no ambition of kind of moving up. We were just ready to move into whatever we were going to move into. And the place we rented would have been similar to a place we bought. But again, that's just my anecdote. I don't know whether that's a tendency or just, something that individuals will observe in their own circle.
Yeah. It'd be interesting to see data on that. I mean, the rental stock is mostly apartments, and we kind of talked about that earlier.
Right. But if your goal was to rent an apartment or a condo, I'm not sure that we would have. Well, as I said, we literally rented the place we eventually purchased, right? Now, again, that's just my experience, and other people could have completely different ones. But I think if you're pretty stable in your life and you know what you want and your family's not expected to grow, I think renting and buying, you would be looking for similar places to live, I would think. Similar neighborhoods, similar quality, similar size.
Yeah, that's probably true. I don't know. We rented literally like the minimum for what we would fit in, and then moved to a bigger place, and then again a bigger place, and then rented a house, and then bought a bigger house. But I don't know. If I could go back in time, if we had decided to buy a house up front, we probably would have bought something big enough for our 10 years in the future selves to avoid having to keep moving. Whereas with renting, there's just less friction with moving.
Mm-hmm. Yeah, of course, which is one of the benefits.
Right. This is one from the Globe and Mail comments. I think this one's interesting because it illustrates a point that I think is important with housing, which is that it's hard to do the math on what you actually earned in terms of investment returns. So this person says, this is a great academic analysis, but here's the reality. I bought a condo in Greater Vancouver for $40,000 in 1974, moved several times to houses using the equity, and then sold the last house for $2 million, downsized, and retired. And then they made some political comments, which I'm not going to read. So if you do the math on that, in terms of annualized returns, that's about 8% per year before accounting for any costs. And that's not accounting for leverage. They would have been, their cash on cash return would be boosted by leverage. But net out, whatever, 2% in maintenance costs. So we're down to 6%. And then they said they moved several times. So if you say 5% transaction cost for 4 different moves kind of spread out throughout the period, it drops down to about 5.5% in terms of annualized returns that they earned on their Vancouver real estate, which is not bad at all. Like that's similar to the numbers that we had in our model, and you still had great outcomes in Vancouver for owning.
Yep.
But the TSX over that period returned more than 9% annualized. The S&P 500 in Canadian dollars returned a little more than 12%. So it's just like you see the number, you see 40,000 to 2 million over any period, and people say, "Wow, that's an incredible return." But you do the math, and it's never as crazy as those numbers make it seem.
Well, and I think what that comment is a perfect microcosm of the whole debate, right? Because that comment is what every young person hears from their parents. Right? That
Yep.
I bought this house in whatever year for whatever tiny amount of money, and today it's worth so much more. Obviously, it's a great investment. And I mean, I think we need, if there's one thing we can take away from this discussion, is we need to get away from this idea that I paid X for my house, I sold my house for Y, my return is Y minus X.
Right.
There's so much wrong with that calculation. But yet that is the tenor of so much of the discussion, around dinner tables and things like that. Like obviously that's not academics, and financial planners understand all of that. But it's really what is driving this renting is throwing money away argument, right?
Totally.
It's this, look, I turned 40,000 into 2 million, right? Over what, 50 years? Right. with all kinds of expenses along the way here that are just being ignored. Right?
Yeah.
So let's at least take the discussion beyond that level.
Yeah. So important. And there's another comment in here that we'll get to in a sec that I think furthers that perception, but I want to do a couple other ones first. So this is the next few are from the Globe and Mail comment section. This person says, the disconnected portfolio manager who wrote this story neglected three unbelievably critical factors in the equation. 4-to-1 leverage on a home, which actually is factored into the model that I linked in that article. Forced savings, which, as we've discussed, agreed, that is important. And tax-free appreciation of a home. Again, agreed on that. So in our online calculator for this, we have a toggle where you can toggle taxable versus non-taxable investments. And it does for sure make a difference, particularly if someone has a higher tax rate. One of the other episodes we've been thinking about doing, that we will do, we just haven't done it yet, is what changes once you've maxed out your registered accounts? What should you change in your investment strategy, or how does it change your financial decision-making? I think that one of them is that owning a home becomes more attractive once you've maxed out your registered accounts, because the opportunity cost of any equity that you have in the home decreases if you're investing in a taxable account as opposed to in your tax-free savings account. And it can be by a lot too. So anyway, I agree with this. Some of the comments there that leverage, yes, it's important, but we did include that in our modeling. Forced savings, as we talked about earlier, is massive. And the tax-free appreciation of a home, it's a factor. It doesn't make owning objectively better in all cases, but it's definitely something worth thinking about, particularly for someone with taxable investments and a high income.
Yeah, I think any time that you assume that the opportunity cost is or that if you don't own a home, you're investing in a taxable account, especially if you're a high income earner and you're paying tax at the highest rate, for sure that's going to erode some of the benefit, right?
Yeah.
I'm not sure that you ignored these factors. Certainly the leverage one we spend a lot of time talking about. If our $40,000 to $2 million investor had, leveraged his investments in the stock market, he would have returned even more than those
Right.
9 and 12% numbers. So, it has to be an apples to apples comparison.
Yep. This next one, again from Globe Mail comments, this one comes up a lot. Every time I talk about this subject, it comes up. So they say the headline makes no sense whatsoever. And Dan, you know this better than I do. Writers don't write the headlines. If it's expensive for an individual or family to own a home, it's equally expensive for a landlord to own that home. That is true. Those expenses are passed on to the renter. Then if one adds in the profit that the landlord wants to make, it becomes hard to see how renting could possibly be a better deal than owning. So this comes up, like I said, all the time, because people will say, well, how are the landlords making money if what you're saying is true? I think that's an assumption that maybe isn't true, that landlords are making money. There's data out there that a huge portion of landlords in Canada right now are in fact losing money in hopes, they're holding this asset with negative or with positive carrying costs. They're taking a loss on the ownership costs in hopes that it's going to appreciate, as it has dramatically over the last 20 or so years. But they're kind of expecting that to continue and therefore willing to take a loss on the carrying costs. And that's kind of the whole point of this type of analysis, that, hey, we can look at any market and say, based on what's happening right now, is renting or owning a better deal at this moment? I think in the long run, in sort of equilibrium, you'd expect it to be roughly a wash. But anyway, at any point in time, though, and I think in a lot of places in Canada right now, renting can look pretty good. And that's because landlords are, in fact, losing money.
Losing money. I was shocked, and just to be clear, so you've linked a Globe and Mail article in here that argues that, 80% or so of investors in Toronto are losing, or 80% of real estate investors are losing money because their condos are not generating enough cash flow. And I think it's really remarkable what we've seen over the last few years, because I got this sense, but it was interesting to read that article that actually had real numbers to confirm that. There was a time, going back to the Middle Ages, right, when owning land or real estate was a way of generating rental income. And that was how you made money on it. Now, people seem quite happy to be cash flow negative with real estate investments because there is a presumption of very large capital appreciation.
Right.
And you know what? There has been very large capital appreciation over the last 10, 15 years in most cities in Canada. And I get that, and maybe that will continue. But to me, the idea that you would intentionally, because I realize a lot of these condo investors bought their condos a couple of years ago and the things have changed. But the fact that I still have clients from time to time telling me now, I'm thinking about buying a condo in Toronto as an investment property. And I'm like, have you done even the most basic math, right?
Yeah.
That like your rent will not cover the mortgage, taxes, and insurance. So every single month you're cash flow negative. What is your expectation for price appreciation for that to be a profitable investment? Like 10% a year? Again, we've seen that in the past, but to project that that's going to continue. So the point is, I think that our expectations have changed so dramatically during a period of low interest rates and high real estate returns, to the point where I think people are making surprisingly short-sighted decisions about, how profitable it is to be a landlord.
Yeah. And a big piece of this point is that the landlord doesn't set market rents. You can buy a condo and set the rent at, $9,000 a month, but that doesn't mean someone's going to pay it.
That's right. Just because your mortgage went up when you refinanced 2 years ago doesn't mean that your tenant is going to take on that additional cost.
Right.
Right.
Yeah. And there's a market, like there's a rental market. It's a tight rental market, but there's still other people renting out places at whatever market rents are. So it's still competitive.
Yep.
You don't get to define your rent because that's what makes you profitable. This next one ties back to one of the ones we talked about earlier that just kind of furthers that perception of rent being a bad financial decision. And this is another one that comes up every time I cover this topic. So this comment says, the top 50% wealthiest people in Canada, what percentage of them rent their home? The bottom 50% wealthiest people in Canada, what percentage of them own their home? Done. So they're basically saying, like, if you look at wealthy people, they tend to be owners. If you look at less wealthy people, they tend to be renters. That's true in the data. Like StatsCan reports on this, and it's true. Renters tend to be less wealthy than owners. So that is a fact. But the explanation is really important. It's not because they own homes that they're wealthy. Renters tend to be younger households, lower income households, and households that spend a larger proportion of their income on housing. So they don't own homes because they can't afford to own a home. If they could buy a home, it wouldn't make them wealthy.
So this is a pretty good example of like causation correlation
Right.
issues, right? It's like exactly like you said, people own a home because they're wealthy. They're not wealthy because they own a home,
Right.
right? I
Yeah.
mean, so I mean, I suppose it's what he stated is true, but again, I mean, there was a funny ad that they used to do for, I think it was some company did it for financial advice or financial planning, and it was something like, people who engaged a financial advisor, on average had a lot more money than people who didn't. So
Yep.
therefore, you should get a financial advisor because
Yep.
clearly it makes you wealthy. And it's like, I think it's the other way around,
Yeah. Yeah.
right? Right. The people who are wealthy are more likely to engage a financial advisor because they can get some value out of it, right? So yeah, this to me is just there's no causation here.
Yeah, I remember that study when it came out. I remember Preet wrote an article in the Globe and Mail just eviscerating that the study.
Yeah, that's a bit like saying, you should buy a Mercedes because people who drive Mercedes are wealthier than
Yeah,
people who don't. So there must be a reason, right? Yeah, I wonder what that
yeah,
reason might be.
yeah, yeah. That's funny. Uh, okay, this is another interesting one. So they start off saying monthly rent payments are actually higher than most mortgage payments. I don't know if that's true, but that's not the important part of this comment or the interesting part. They then go on to say, additionally, broaden the scope of this analysis in quotation marks, I guess it wasn't really analysis, beyond the convenient 25 years presented, and you're into the time span when basically every single homeowner is now mortgage free. In my case, after 19 years, good for you. People do love to brag about paying off their
How
mortgage,
quickly
which is
they paid
fine.
off their mortgage. Okay.
Yeah, good for them. In 19 years, not 25. Accelerated payments, I guess. I don't know. So they say, therefore, the whole argument is invalid. How is a renter able to invest these phantom savings when there aren't any? So that's back to the original thing about. So in the numbers that I looked at, I don't know if that's true. In some cities, I think it is, where the cost of rent is actually more than the cost of owning right now. So that may be true in some places, but it's not true everywhere. But I think that the point about paying off the mortgage is really important. And it's probably one of the most common housing misconceptions, which is that once the mortgage is paid off, owning is just above and beyond better than either renting or owning with a mortgage. Now, we talked about this in the podcast episode. And to be fair, this person read the Globe Mail article, didn't listen to the podcast episode. But as we talked about in that episode, mortgages are for financial wealth, they're great. Like, if your only goal was to maximize your financial wealth, which would be a pretty ridiculous goal, you would want to keep your mortgage as long as possible. You would want to keep stripping out the equity in your home to invest in stocks. Now, you shouldn't do that probably.
Well, that's
And we,
the Smith maneuver, basically, is
yeah,
what you're
right.
talking about, right? Yeah.
Yeah, which, anecdotally, Smith maneuver, not so much because our clients tend to be in a position where they could just pay off their mortgage. And in a lot of cases, we will recommend doing that. We call it a debt swap, where we'll say, hey, you have this taxable investment, you have this mortgage, you could pay off your mortgage and then re-borrow to invest and make the interest on your mortgage deductible.
Right. And that's just a tax strategy. It
Yeah,
doesn't
yeah,
really change your
exactly.
risk in any way. Yeah.
Correct. And people will always say, wow, that's so smart. I want to do that. And so they'll pay off their mortgage. And then we're like, okay, step 2, like you have to borrow again now. And they're like, yeah, no, I'm actually kind of good without the mortgage. So I've seen that countless times. But anyway, so the main point on this comment is that once you've paid off your mortgage, owning a home actually gets more expensive because the cost of having equity in a home is typically higher than the cost of financing a home with a mortgage, with debt. The cost of capital is higher with equity than it is with debt financing for a home. So if you put this into if you run the numbers on this, owning without a mortgage looks a lot worse than owning with a mortgage relative to renting. And I don't think people get that. So the math goes in the opposite direction of what this comment is suggesting.
Yeah, so this is a very interesting idea, I think, to take to the next level. So, there's a couple of questions. One is, imagine that you are an investor and you've got a significant amount in taxable investments. You're renting now, you decide to purchase a home. You have enough in investments to just liquidate. Let's leave aside any capital gains taxes, from not the point, to take all that cash and buy the home mortgage free. Or would you be better off just putting 20% down, taking a mortgage for the rest? And I mean, again, it comes back to this idea that leverage works very well in a market that goes up, and in one where you don't panic sell when it goes down. And then just to take it to the next step is, what if you are like this homeowner, he pays off his mortgage in 19 years. He was paying several $1,000s a month in mortgage payments, no longer has that payment, presumably has extra cash flow now. What do you do with it? I mean, presumably you just invest it in a taxable account. I don't know how that all of those things factor into the analysis.
Yeah. I think the other thing is, do you want to be debt free? Like I made this same comment on Twitter a few times because it comes up a lot in this whole discussion. And people have the same kind of question, like, oh, well, I've got to pay it off house. Like, should I be borrowing against it if I want to match the net worth of a homeowner or of a renter? And the answer is like, no. Why would that be your objective? Why would you want to match the net worth of a hypothetical renter in a situation otherwise similar to yours? I don't see any sense in that being a goal that somebody would have. I mean, having a paid for home, as we've talked about, is pretty nice from the perspective of security. So I don't, just because you could have a higher net worth potentially with more risk, obviously, doesn't mean you should be borrowing against your paid for house.
Well, that's my inclination too. And I think that you could probably make a financial argument that, as you said, yes, you could just keep dipping into that equity, investing in equities, and you would end up with a higher net worth in most cases, but with a lot more volatility
Yeah.
and a lot less, peace of mind. So what value do you put on the latter? I put pretty high value on it. I think sounds like you do too.
Yeah.
Maybe not everybody does. People argue I can always sell my investments and pay off the mortgage at any time. Well, maybe, unless the investments are down.
Yeah.
So I would agree with you. I think that, again, if there's a major takeaway from this whole discussion, is it's not just a financial decision. It's very much a lifestyle decision too.
Yep. So Justin HCI in the Rational Miter community chimed in on this discussion, which was going on in the community. I had responded to somebody else saying they had asked, should I, actually I have the comment here. They said, does this mean you will need to continue to be levered up higher in the last 5 years of a 25-year mortgage, or maybe not even pay off the mortgage? And I said, you don't have to do that. Matching a renter's net worth is not a great goal. I'd be happy with a paid for home. And then Justin HCI, who often has very thoughtful comments in the community, said, yet another good reminder that the purpose of money and savings is to fund consumption, not to get the high score on the arcade machine. Two people who consume the exact same amount, same stuff might need different levels of wealth to fund that consumption if one has more uncertainty about the cost to consume. Owning a paid-off house hedges your cost of shelter consumption, whereas the uncertainty of changes to rental prices or availability might require a bigger wealth buffer for the same level of certainty that shelter consumption needs will be met. So that was interesting. That's different from a little bit different from what we were just talking about. Justin's saying a renter has, they don't have the hedge against their future housing consumption, so they actually need more wealth to match the sort of certainty equivalent outcome of an owner, which again just speaks to the idea that as an owner, having an objective of matching the net worth of a renter doesn't make a whole lot of sense. It's just such a different situation.
It is. I mean, it's just there's sort of different goals and different ways of perceiving value, right?
Yeah.
So, mhm.
I think I've got a couple more comments here. Uh, oh, this is a nice one. Just kind of fun to read. As a former homeowner, I love being a renter now. In a great location, quiet building, everything taken care of. The owner of the complex committed to security of tenure, no surprise costs, older building under rent control, close to public transit with a swimming pool, library, gym, and other amenities on site. Friendly, unobtrusive neighbors. What more could anyone want?
You found a happy renter.
Yeah, a happy renter. I thought it was funny.
Yeah. I think that is one part of, the story that maybe doesn't get enough play. We've talked a lot about how much comfort people take in controlling their own destiny as a homeowner, but I think there is definitely a liberating feeling to being a renter in many ways, right? Again, you have to, like, this listener has obviously found a great place, right? Not everybody is as fortunate as that.
Right.
But if you do find a great place, there is really something very satisfying about knowing, I don't have to worry that my roof's going to leak, my basement's going to leak, that I'm going to have some expensive repair that I have to worry about, that if something goes wrong, I can get it fixed. I can, maybe be a little lighter on my feet than I could have been as a homeowner. And that definitely, comes with, or that is definitely a liberating feeling that you don't necessarily get when you're a homeowner. And I think we touched on it a little bit earlier, because I was going to say that there's also this idea that, like, what I call a renter's mindset.
Mm.
We noticed this during the years where we rented as well. You were just a little bit more zen about a lot of imperfections in the property, right? So, for example, if you had a kitchen or a bathroom that maybe wasn't fully renovated, maybe isn't what you would normally want if you owned the place, you just learn to stop worrying about it. And at some point, you don't even think about it anymore. And it's a little bit like love the one you're with, right? You just learn to say, this place isn't perfect, but you know what? I'm not even going to waste my mental energy thinking about this anymore. And then it changes, believe me, because as I described you, we rented a place and then we bought the same place. Well, what do you think we did as soon as we bought it? All of those things that we had become quite laid back about all of a sudden became things that needed to get fixed. So we
Yeah.
dumped a lot of money into the place and fixed it up. Now, is it better? Yeah. But am I happier? I don't know. Maybe incrementally. But I just think that there is something to be said about not always worrying about trying to keep the place that you own up to some
Mm.
standard that is very difficult to maintain.
Man, so in our last rental, which was a nice house in Little Italy in Ottawa, um, it was a very part of it was a very old house, but it had been renovated and expanded. The guy who owned it was a home builder, so it was really nice, really nicely finished. But the kitchen was a little bit older, and the like grout on the backsplash was kind of chipping away, and water would get up there, and I could see it seeping back behind the counter, and I was like, man, that sucks. But I didn't care because it wasn't my problem, and I knew this guy would fix it, and he'd redo the kitchen in a few years, and it would look great. Now in my house that I own, I'm always so stressed about, like, is the silicone bead in the backsplash still in good shape? Because I really don't want water to get back
Because
there and have
that's
to
going to
rip
be
up the.
your problem if the tiles
Exactly.
start to come off the wall, right? Um,
Exactly.
and so, and I don't want to suggest that you have kind of that you're happier with lower standards, but honestly, in some ways, you are happier
Yeah.
with lower standards, right? Not to the point where you give up and you don't care about the place where you live. You just are not necessarily burdened by a myriad of minor stresses that accumulate to become a major stress at some point, right? I mean, I definitely worry more about property now that we own it than I did when we rented it. It's the same place,
Yeah. That
right?
your example is super interesting because it's
Mm-hmm.
literally the same place. It's just
Yeah, it's a controlled, like, it's a
yeah.
natural experiment, right?
Yeah.
So
Okay, I got one more from a happy renter. Happy renter here with no intention to own anytime soon. We've been able to accumulate a portfolio of 1.4 million in less than 15 years. If we had bought as we were planning 10 years ago, we would not be near that amount in net worth and would be under big financial stress for our retirement / daily expenses. Looking back, it was a wise choice. I would not trade our lifestyle for the one of a homeowner anytime soon.
Yeah.
Interesting.
So yeah, there you go again with the idea of just feeling a little lighter, right? Um, so the one I don't know that this came up in the comments very often, and again, it's sort of hard to consider in the analysis, but one of the things that I think is really important, especially as someone who has two kids in their late 20s, early 30s, right? Like this age where your career is going to be very important and where you are living and working is going to depend. I mean, maybe less so now with work from home, but it's still an issue. And
Yeah,
what I'm getting at is if you decide you're going to settle down and buy a home at that age, assuming you can afford it, you're tying yourself down to one geographic location. And if something happens with your job, or if you get an offer for a much better job in a different center, what is the cost of saying no to a career opportunity that you choose not to take because you bought a house?
yeah,
Right? I mean, this must happen to young people all the time. Again, fewer and fewer young people are in that position. But if those who are must feel that it does put some guardrails around your career development.
for sure. Labor mobility is huge with a housing decision. I know I haven't seen anything on this for Canada, but I know in the United States they can have the issue of mortgage lock in because they have these super long term mortgages. So if you get a mortgage at a low rate and then you move, you can't keep that mortgage. You have to move to a mortgage with a higher rate. So if you buy when rates are low and then rates go up, you can get kind of locked into a mortgage. And I'm pretty sure I've read research on that affecting labor mobility. So exactly what you're talking about. So it is definitely related to that point.
Yeah, I mean, that would be really interesting to hear from listeners who might be in that boat. Anybody has stories to share, either good or bad, right? Like either I'm a renter and I'm glad I was because I could pack up and move to a much better job, or the opposite. I had to turn down an opportunity because the transaction costs of selling the house would have been too high.
Yeah, no, I would definitely love to hear stories like that. That'd be interesting to talk about. And on that point, we experimented today with a new. We've never done this before, where we kind of read out. We've read out comments before. We've never had a whole episode. This is kind of like the whole thing was an after show. I don't know, like the whole thing. The whole thing was reading out feedback and comments from the audience and responding to it. I thought it was kind of fun to do. It took way less prep for us, which is kind of nice as a break. But I've often had this thought, particularly with the Rational Reminder community, because there's so many thoughtful people in there that say really interesting stuff that I take a lot away from after episodes. So I've thought about, like, could we do this? Could we do a follow-up episode every few weeks or something where all we do is discuss what other people in the community and elsewhere elsewhere in the podcast ecosystem are talking about? So I'd be super interested in audience feedback on what they thought of this format, and if it was terrible and we should never do it again, or if they kind of liked it, because I do enjoy this format.
Well, and I think we can learn a lot from thoughtful listeners and readers as well, right? It's so important in a discussion like this, and it's also so rare, frankly, in discussions like these, to be open-minded. I mean, it seems that all of us have this kind of natural inclination when we read something, an opinion or an analysis that doesn't jive with our firsthand experience, that our first reaction is to just reject it out of hand, right? Or worse, to attack the person who brought it up. And it's nice to see in the community there have been a lot of thoughtful comments from people who read it over, thought it over, didn't just get defensive about their own decisions, right?
Yeah.
And tried to add something new to it. It is pretty remarkable, and you'll see, like, especially on the article that you did in the Globe. I've had the same experience with Globe articles, and it's not unique to the Globe by any stretch, where people will read the headline and the first paragraph and then immediately go into the comment and say,
Yeah.
what an idiot this writer
Yeah.
is. And and they'll say, you didn't even think about this. And I'm like, that's in the third paragraph. Like
Yeah.
if you had taken a little bit longer to actually read the piece before you commented on it, your comment might have been very different.
Yeah.
So, it's just kind of a reminder to all of us that, like, take the argument seriously, read it through, think about it. Don't take it as a personal attack, and respond with your own experience, right? It's not about trying to, win an argument. It's about, we all should come away from this learning something.
Yeah. And I do find the rational-minded communities generally quite good on that. We do have a pretty strong moderation force. So like when there have been discussions that go off the rails, they usually get put back on track. And if people are continuously taking them off the rails, they've been taken out of the community. So it's generally better than the Globe and Mail comments. I'll put it that way.
Yeah, there's I mean, as we all know, right? Like some of these times, articles and certain subject matter attract cranks, and sometimes we have to just take it with a grain of salt. But unfortunately, the loudest voices tend to be the least interesting ones, and the moderation is a great feature because it allows us. It's not about censorship; it's about trying to put some rules around the debate, right?
Yeah. I've got a soft spot for Globe and Mail comments though, because I don't know if I ever told you this story, Dan, but the way that I ended up at PWL in a sort of roundabout way is I was, when I was working selling mutual funds, when I knew nothing, I didn't know what an index fund was at the time.
Okay.
I was interviewed for, do you remember the Me and My Money column?
Yes.
I can't remember Larry McDonald, maybe was his name.
Yes, that's right.
Yeah. So he would interview people about how they invest their own money. Whatever. It's kind of a neat little column. And a friend of mine had done it and asked if I wanted to do it. And I was a, very green financial advisor with an insurance and mutual funds license. And so I wanted to get my name out there. So I said, sure, I'll do it. And so this guy interviews me about how I invest. And I told him about people are going to laugh. I think it was like a Fidelity dividend mutual fund or something that I had all my money invested in at the time. Talked about why I thought that was a good thing and whatever. And I got absolutely roasted. This is like 2012 or something. Absolutely roasted in the comments. People were calling me a snake oil salesman and all this stuff. And I read the comments and I was like, whoa. Like I think I need to learn more about this.
Well, it was good that you took away something that positive and not just, I'll never write for the Globe and Mail again, or I'll never share my thoughts again. So.
Oh yeah. So that article is still up, which is, I don't know, sort of unfortunate, but kind of a nice memory capsule. But unfortunately, the comments are gone because they changed their comments engine at some point since whenever that was, 2012. But yeah, quite the memory there.
Funny. Yeah, it's I mean, yeah, most of us, I think we all had an awakening at some point in our lives, but that sounds a little ruder than most of the awakenings that the rest of us have enjoyed. It's funny. I look back to all of the years I did the Canadian Couch Potato blog, and the commentary on it was so civil, and I like to think that I tried to foster that, but I think it was mostly just good luck that it just attracted people who were very civil, and people disagreed for sure. But it was very much a civilized discussion, lots of dialogue, people asking questions and then others answering their questions in a constructive way. And it makes such a huge difference to me. It made the blog so much more valuable than it would have been if it was just my articles. It's just, that's a rare commodity now online. Unfortunately, it has deteriorated quite a bit. So the moderation, I think, has really made a big difference here.
Yep. Well, I think we made some lemonade out of the lemony comments online about the rent versus buy discussion. Hopefully people enjoyed it. Anything else to add, Dan, or is that it?
No, I think we covered it all. That was great.
All right. Well, thanks for listening, everyone, and we'll be back next week.